Hello everyone. Uh, Today we are going to discuss a new chapter known as financial statement analysis. Okay, so we have already done the meaning of financial statement, or we have already done the chapter financial analysis. I mean financial statement. So in financial statement, we have studied the format of balance sheet and the format of statement of PL. We have also studied the each and every individual major heading and subheading. We have also studied the items that will be categorized under these subheadings. Okay. We have also studied the items which is not going to be uh, be accounted in CBSE in the previous chapter. Okay, so therefore, let us now move further and study the analysis of these two. Let us move further and study the analysis of these two. So, what is the meaning of analysis? So, we'll study all this, the meaning of analysis, and of financial statement. Okay, so let us study. Yeah. So let us study the meaning or definition of financial statement analysis. Okay, what is the meaning or definition of a financial statement analysis? Financial statement analysis is the process. First of all, it is a process. Process of doing what, sir? Process of critical evaluation. Okay, process of critical evaluation. So what is the meaning of critical evaluation? Critical evaluation is digging deeper into particular thing. Okay, say I got a point and now I'll go deep into the meaning, the source, okay, the understanding why it has happened, when it has happened. So that is known as a critical evaluation. You get a topic, you dig more deep on that, you get more and more information about that, you get more and more intel about that. So that is known as critical evaluation. So the process of critical evaluation of what? Of financial information. Okay, in the financial statement. Okay, the process of critical evaluation of financial statement. Why? In order to understand and make decisions. Okay, in order to understand and make decision of what? Of operation of the firm is known as financial statement analysis. Again, financial statement analysis is a process of critical evaluation. Okay, critical evaluation of financial information or financial statement. Why? In order to make decisions or to understand the financial information or financial statement better. Okay, regarding the operation of the firm is known as financial statement analysis. Okay, it is also a process of identifying the strength, I mean financial strength and weakness of the firm. Okay, by establishing relationship between the items of the balance sheet or income statement, that is statement of profit and loss. So all the items of profit and loss statement or balance sheet, you establish a relationship between them. If you want to find all the cash inflow and outflow, you take out all the cash. Okay, if you want to see the solvency of the firm, that whether the firm is going to be a going concern or not, you have to use the items according to that. Okay, if you want to see the liquidity of the firm, you will use the item of the balance sheet according to that, and then you will decide the net profit ratio, the gross profit ratio, all those things. If you want to know, you'll need the items of the financial statement. You establish a relationship and then you get the information. Okay. Learning about the meaning, you should also understand there is a difference between analysis and interpretation. There is a little bit difference, but then yet they are complementary to each other. They cannot be separated when we study financial statement analysis. Why? Because analysis, because financial statement analysis includes both analysis and interpretation. Analysis means simplification of financial data by methodical classification given in financial statement. As when you have learned the format, you see there are a lot of complex process, and then there is a lot of steps. There is a specific hierarchical structure of making financial statement. Okay, which makes it very tough to sometimes to find things and to make decisions and all. So in order to simplify that, in order to be specific regarding the queries, if I want something and if I want to know something, so I should not read the whole financial information, rather I will get that particular something out of the financial statement. So in order to get the information like that, okay, we do analysis. Okay, whereas interpret after analysis, okay, after we got the information, we have to interpret. And what does interpretation means? It means explaining the meaning and significance of the data. What impact, what value, okay, what are the alterations that can happen is known as interpretation. The two are complementary to each other. Okay, analysis is useless without interpretation. Interpretation without analysis is difficult or even impossible. Okay, I hope you got the meaning of financial statement analysis. Okay, let us go further and understand the objective, or why, or in simple, sir, why do we need to do financial statement analysis? Why? What is the reason? Okay, let us understand the reason one by one. The first one is, or rather, this is the objective or the significance is the answer to the question. Okay, the first reason why the financial statement should be made, or why it is important, is the financial statement analysis helps complex financial data in a simplified and understandable. Like I told you, the format is structured in a particular way. So if we need a small or a particular a different information, I mean like information related to one specific reason, we don't have to go through the whole financial statement again and again. Rather, we will use this tool, financial statement analysis tool, and the things that we want, the information that we want, gets simplified and understandable. Okay. The second reason why this financial statement analysis is made is to judge the financial stability of the firm, whether the firm is going to last long or whether the firm is following the going concern concept. Okay. Then the third one is to measure the short term and the long term solvency of the firm. So if the firm has taken a short term loan or a long term loan, whether the business is able to pay that, whether the business will be able to pay that. So in order to know that, again we can use the analysis tool. Okay, to measure the operating efficiency and profitability of the firm. Operating efficiency means whether the firm is using or utilizing all its resources in a best possible manner. That means whether the firm is working on reducing the cost of a product or not. Okay, and if they are efficient, obviously the profit will rise. So in order to see whether this is happening or not, we use the tool. We don't see the whole financial statement, we use the financial statement analysis tool, and then we understand whether these things are happening or not. Okay, then the analysis is done to compare intra firm. Intra means within the firm. Okay, intra means within the firm's position, whether it's good or not, or inter firm means between two business organization. Okay, and the pattern and position within the industry. What is an industry? An industry is a cluster of organization who does a similar kind of business. Like a textile industry makes clothes, the whole factory, all the factories make the clothes. So to check in that industry where is are the okay, then the last one categorized that why do we need to, or the objective or significance of financial statement analysis is to assess or check the future prospect. What is the future, future viability of the firm? Okay, whether I'll grow or I need diversification or I need to expand my business or I need to, technically advance my business. So in order to know that, we do financial statement analysis. Okay, very good. Let us now go to the limitation of financial statement. Yes, it is very beneficial to analyze. It is very beneficial to analyze, but yet there is some drawbacks. Yet there is some disadvantage. Okay, these disadvantages and drawbacks are due to disadvantages and drawbacks are due to many factors. Okay, we should analyze, like before, just a topic, this a topic before we have studied why it is important. Now we'll see, though it is important, but yet it contains some drawback and some disadvantages. Okay, what are those? Let us study now. The limitations. The first limitation is the financial statement analysis does not consider price level changes. That means whatever is recorded in the financial statement, we take care of that. But the recent changes in the price level of, say, raw material, of finished good, the sale price, anything, it has not considered that. I bought a raw material for, say, $100, and uh, due to this corona, say, let's talk about oil. The oil prices were $100 per barrel, for example, and due to corona, the oil price now slipped down to $75. This is the current price, but we have already bought this, so we have taken this into consideration. So sometimes what happens, because of that, because of this thing, so that it ignores, it does not consider the current price level, it might give some wrong information. Okay. Next one is the financial statement analysis may be misleading. Why? Because without the knowledge of changes in the accounting procedure followed by the firm. So sometimes what happens, generally the accounting we have already studied in class 11. There are various accounting policies, accounting procedures that is followed, which is also a um, generally accepted accounting policy, that is also known as GAAP. Okay, so these accepted accounting policies keeps on updated. Okay, if the firm is not getting updated with the changes in the accounting policy, okay, regarding a particular, say a new update has come regarding closing stock, how to maintain the closing stock, or a new update has come regarding recording of the intangible assets. Okay, so if we are not adhering to the changes that is suggested by some organization, what will happen? The analysis, I mean, the first of all, the recording will be a faulty one. Okay, the financial statement, the recording will not be proper. Once the recording is not proper, the analysis that, the information that we want, the analysis that is done, the information that they provide will be also a misleading one. Why? Because they have not updated with the accounting procedure. Okay. Then the third one is, it is just a study of interim report. What is the meaning of interim report? Interim report means a short-term report. Okay. Financial statement analysis is done because it is done for the current year or previous year. It does not take care of the whole trend. It is done for a particular period. Therefore, they say that it is a limitation because it is just done for that particular period, not for the entire term of the business, life of the business. Okay. Then the next topic is the monetary information alone. So this will always be a limitation that it consists of monetary. The monetary information alone is considered in financial analysis, while a non-monetary aspect is often ignored. So obviously, this is always a disadvantage, is considered to be disadvantage because financial statement or analysis consider always a monetary aspect, but a non-monetary aspect is always ignored. For example, the quality of employee, the level of training that we have provided, okay, then the quality of the product with compared to the other products. So these things are ignored. The working condition, the working culture that we provide, the labor turnover, many laborers are no not many laborers are leaving the organization. So these things are ignored in the financial statement, and yes, it is considered as one of the limitation. Okay. Then the last one is financial statement are prepared on the basis of going concern concept. As such, it does not reflect the current position. So keeping in mind of going concern, that is the future viability. Always we keep in mind the future viability of the firm. Okay. And what happens? The as a result, the current position is sometimes ignored. So that is also another limitation of financial statement analysis. Okay. The next topic that we are going to explore is the parties interested in financial statement analysis. I mean, like, we make the financial statement. Who makes the financial statement? The company. Okay. They follow Schedule 3 and they make the financial statement. What is there in the financial statement? Balance sheet, statement of profit and loss, cash flow statement. Okay. Yes. So the balance sheet, the statement of PL, and the cash flow. These are made not only for the management but also the stakeholders. These stakeholders, they uses this financial statement and take their decision. And different stakeholder will have a different decision or different uses of this financial statement. Okay, now we're going to study who are the stakeholders and what are their areas of interest in the financial statement. Why would they use the analysis of financial statement? Okay, what is their utility? Okay, so let us start. It is very much important to be clear about financial statement analysis because generally a 1 marks question, at least 2 to 3 marks, no, yeah, at least 2 to 3 marks will come in exam from the analysis. I mean, from the theoretical part of financial statement. So it is very important for us to understand the meaning. Okay. So who are the parties that are interested in financial statement analysis? Okay. The first one is the finance manager. A finance manager will be interested in analysis. Now, why? Because it focuses on the strength, weakness, and credit worthiness of the company, okay, which will help the finance manager to assess the financial potential of the business. Okay, a finance manager generally he deals with procuring the funds and utilization of the funds. So in order to see whether the firm or the organization needs more funds or the utilization of the firm is being done in a proper way or not, okay, he uses the financial statement analysis. Why? To focus the strength, to focus on strength, weakness, and credit worthiness. Credit worthiness means what is the reputation of the company in front of the banker. In Hindi, we say awqat. The awqat of the company is known as the credit worthiness. Okay, where the company stands when it comes to its to show its worthiness, to show its worth. That is known as how much if a company is to be given some sort of financial leverage, how much importance it gets. So that is known as credit worthiness of the company, and this will help the finance manager to assess the financial position of the business. Okay, and why? Because it will help him in predicting future financial requirement. I mean, procurement of funds, and enable the financial manager to take appropriate action. Very good. Next, who uses this? The second stakeholder who uses this financial statement analysis is management. Okay, management. The management is interested in this enterprise's financial condition, that is profitability and solvency. So obviously, being a part of management, you'll always, you have invested money in the business, so you look for the profitability, and you also look for whether the profitability is sustainable or not. That which means the profit is long term or not. So that you'll see the solvency. Okay, it uses many methods to analyze the financial data. Such analysis helps the management to exercise control over the business and take such decisions that will help to run the business in more efficiently. Okay, if the business runs in efficiency, then the profitability is increased, and obviously if the profitability is increased, the long-term solvency of the business will also be sound. Okay, then comes the next stakeholders who might use the financial statement and analyze some of it is trade creditors. Okay, what a trade creditor through an analysis of financial statement, what he'll do, he'll judge not only the present ability of the company to meet its obligations, but the probability of continued ability to meet its financial obligations. A trade creditor generally gives short-term loan or short-term, goods or supply goods to the organization. So therefore, if I am supplying goods to an organization, I will always look for the financial soundness, whether they will be able to pay whatever supplies I have done on behalf of that or on consideration of that, they will be able to pay the money or not. Okay, I'll see both the short term and the long term viability. For example, if I'm supplying goods, so whether they will able to pay the money in a short term time or in a long term time, in both. Okay, so to check that, they does some analysis. Concluding, trade creditors are particularly interested in firm's ability to meet their claims. Like I said, if I supply goods to the firm, then they'll pay or not over a short time period. They don't, trade creditors, they don't give long term credits. Okay. The next stakeholders who are financially interested or inclined is the banks, the bankers or the lenders, people who lend money to the business. Now, why are they so much interested? Let us see. All the lenders provide long-term debts to the business, okay, such as banks, insurance company, financial institution, or private, or taking loan from a private lenders. Okay, why? Because they are interested to know the profit earning capacity. Obviously, if you give loan to someone, if you say you have a friend and then they ask for, buy, you give me $100 and I'll give you, day after tomorrow. What is the first thing you'll see? He will be able to return me back on that particular time or not. If somewhere you find that this person is not worth enough giving, what you will say, see brother, I don't have enough money with me right now, and maybe I'll give it tomorrow. Or if you see that person is very sound, he has very sound financial background, you will not think even for once. You'll immediately take out that $100 and give it to him. So the banker and lenders will also see the same thing, the profit earning capacity of the business and its long term and short term solvency. Okay, they are able to pay their long term and short term debts or not. So once they know about that, then they will give the loan. The bankers and the lenders also wants to know about the present position and the future prospect of the concern of the financial firm. They are interested in ensuring regular payment of interest and repayment of the principal amount of on the scheduled date. So it's very simple. If you pay money, if you give money on a loan to somebody, on credit to somebody, you expect interest and the principal amount to be returned on time. That's it. If you feel that that is possible, immediately give the loan. Okay. And how will they know that? How will the banker and lenders know that all these things are made? They will do the analysis of the financial statement. Okay, and then they will take decisions. Then there is investors. Another stakeholders are the investors. Investor includes the shareholders. Okay, they are also known as suppliers of fund to run the concern. Okay, they are interested in profitability, dividend declared, market value of their investment, long-term solvency of the business concern. So if I'm the owner of the business, I will see that how much I've invested in the amount that I've invested has grown or not. Okay, the long-term solvency has met or not, the profitability, the dividend that I'm going to get. These are the things that the investors are particularly concerned with. Okay, the investor does financial statement analysis, okay, and evaluate the efficiency of the management, whether the management is doing properly or not, whether the management is able to reduce the cost and increase the profitability. The potential investor means the people who wants to invest in the business, they have not invested, that they wants to invest, are also interested in knowing the earning capacity of the business, because if you invest in the business, you would always look for the earning capacity. Okay, and its prospect of future growth and returns. Return means how much I've invested and how much I'm getting. Then there is labor union. One of the stakeholders is also known as the labor union. The labor union analyze the financial statements to assess or to know whether the business is concerned with earning fair rate of return. Because if the business is earning profit, only then the employee will see themselves growing in the business. Okay, whether they should demand an increase wages or not. So if the firm is earning good, if the firm is doing good, then the labor union will definitely ask for increase in the wage. Okay, so this analysis helps the labor union in settling the wage agreement. Okay, I hope you know what is the meaning of labor union. These unions are the people who come together, all the laborers, they come together, to uh, to negotiate with the management. Okay. Then there is government, another stakeholder. Why would they need the financial statement? The financial statement analysis is done by the government to provide information like income tax, sales tax, excise duty department to determine various tax liability. Okay. On the basis of this statement, government can judge which industry is progressing and which industry needs government help or government intervention. Okay. Then the government can take decisions. Okay. Government can take decisions in reducing the excise duty. For example, if the firm is not doing well in the business or if the going concern is affected, then they can take decisions in the uh, in reducing tax or giving tax holidays, okay, where the profit margin is less for the organization. Okay, so this is how the government you know uses the financial statement. Okay, so the next one is the regulatory authority. Like for example, if there's a company that issue says Then there is savvy, there is CLB. Okay, they will always be seeing the financial statement analysis, or seeing the analysis that is done, that whether the business is following the rules and regulation in a proper manner or not. Okay. Then there is customers who are always interested in knowing the continuance of the business, whether we are going to get the supply on time and the quality. Okay, because the customers are uh, dependent on the product. Then there is tax authority, whether they use the financial statement analysis to assess of tax liability, whether the business is paying a proper tax or not. Okay. Then there is researchers who like to analyze to see the profitability, growth, and financial position of the firm or future prospects. And other parties who have their own opinion, like research institution, newspaper, trade association, economists. They might use the financial statement analysis to see the companies or make a report on the company's future viability. Okay, so this is the thing about financial statement analysis. Okay, if you have any doubt with regards to this, you can comment below or you can ask. Okay.